Silver doesn't move slowly, it only pretends to. Most of the time, silver just sit there doing nothing. No excitement, no headlines, no urgency. Weeks turn into months, months turn into years. And that's exactly when people give up on it. They say silver is boring, they say it's manipulated, they say it never moves. But then, without warning, something changes. Silver doesn't rise gradually like most assets, it explodes. In a matter of weeks, it's up 30%, 50%, sometimes even 100%. And suddenly, everyone is asking the same question: why didn't I see this coming? The truth is, you were not supposed to. Because silver doesn't move when the news changes, it moves when pressure becomes unbearable. Think of silver like a spring being pushed down. Every time it's suppressed, that pressure doesn't disappear, it builds slowly, quietly, invisibly. And this compression can last for years. Here's the big mistake most people make: they think silver should behave like gold or like stocks or like crypto. It doesn't. Silver is a thin market, which means a relatively small amount of real metal is traded against a massive amount of paper contracts. That creates an illusion of abundance. Prices look stable, calm, and controlled, while underneath, stress keeps building. During this phase, big players cap the price, retail investors lose interest, volume dries up, volatility disappears, and boredom takes over. That boredom is not random, it's psychological conditioning, because silver only moves fast when almost nobody is paying attention. And this is where the real truth comes in. Silver moves fast only when two forces collide at the same time, not one, both. The first is physical stress. This happens quietly. Industrial demand keeps rising. Mines struggle to increase supply. Inventories slowly decline. Deliveries take longer. Premiums creep up. None of this makes headlines. None of this trends on social media. It slow pressure. The second force is financial panic. This part is fast, emotional, and explosive. It shows up when markets shake, when confidence cracks, when leverage is exposed, when paper promises are questioned. Fear enters the system, and suddenly everyone wants certainty. Silver does nothing when only one of these forces exists, but when physical scarcity meets financial fear, that's when silver stops walking and starts teleporting. And that's why the move is always sudden. Humans are wired to wait for confirmation. We want safety, we want proof, we want reassurance. Silver doesn't offer that. Instead, it goes sideways for so long that it destroys patience. It exhausts conviction. It traps both bulls and bears. And then one day, a normal looking move appears, then another, then a gap, then volatility erupts. Before most people even react, silver is already up 40%. By the time the headlines show up, the opportunity is half gone. This is also why the same pattern repeats every cycle. Those who buy late wait for validation. They need analysts, they need news, they need permission. They arrive after volatility. But those who are early do something different. They accumulate during boredom, they buy when sentiment is dead. They ignore price and watch pressure instead. They don't chase the move, they wait for it. And there's one final signal almost nobody watches. Before every explosive silver move, volatility collapses, the trading range tightens, volume dries up, interest disappears. That's not weakness, that's stored energy. Silver never announces itself loudly, it whispers and then it screams. So remember this: silver doesn't move fast because something good happens. It moves fast because pressure was hidden for too long, supply was sustained, and confidence finally cracked. By the time silver feels safe, it's already expensive, and by the time everyone agrees, the move is already mature. The real opportunity is when silver feels boring, forgotten, and dead. That's not the end of the story, that's the beginning.